to have you back. You're still tuned into All About Stocks. We've got Ambrish Baliga, who's still here with us to help us find the right investments in these markets for a long-term period. But before we go to his growth pick as well as his value pick, let's talk about some of the stocks that he had recommended to us 2 weeks ago when he had joined us on the show. Ambrish, you had picked out an Exide as your growth pick. You recommended it at a price of 150. You had placed a target of 240 on the counter with a time horizon of 24 months. Now, given the fact that we've been talking about news, the company is planning to slash the prices in order to boost its sales. Do you think that the fundamentals are on track and that the growth prospects for the company do remain robust?
Fundamentals clearly are on track, and in spite of them planning to reduce the selling price of the batteries, I think the margins would still be on track because clearly the lead price coming down are expected to come down still further going ahead over the next couple of months. So I suppose the price target still remains the same.
All right, so Ambrish Baliga retaining that pick in terms of an Exide Industries, a target of 240 is what he sees in the long term. But let's go on to his value pick. He had chosen out from the oil and gas basket a GAIL India. He recommended it at a price of 429.7. He had a buy call on it with an upside target for 18 months at a level of 600 rupees. Ambrish, would you want to retain this stock as well, given the kind of volatility that we've seen for crude oil prices and the way most of the oil and gas stocks have been trashed?
Yes, but I suppose that will not really affect GAIL very much. And when we had given the call at about 427, 430, what we had said was since this is a long-term pick, it is better to buy a small quantity at 427, 430, and in case you see levels of about 400, 410, I think one should be buying more at those levels. So since it has come down to, the second level which I talked about, I think people should be buying more at the current levels and then hold on for the next 1.5 to 2 years.
Okay, Ambrish is choosing to hold on to those two picks that he had given us over the last 2 weeks. But let's find out his new picks for today, which is his value and which is his growth pick for the long-term perspective. His value pick emerges in the form of a Voltas. And for those of you who aren't familiar with what exactly the company does and how it's performed over the last 1 year, maybe this will give you a better idea.
Founded in India in 1954, Voltas provides engineering solutions like air conditioning, heating, refrigeration, and water management, among many other services. While the company is based in India, Voltas has a significant foothold overseas, especially in the Middle Eastern market. But a recent increase in the number of players in the electromechanical segment has taken its toll on the company's business in the region. Also, the Eurozone debt crisis and global liquidity pressures will lead to a slowdown in real estate projects in the Middle East, which is bound to hurt margins further. However, it's not all bad news from the Middle East. With Qatar gearing up to host the 2021 FIFA World Cup, a significant pickup in business is expected. Voltas, which helps power the Burj Khalifa, the tallest tower in the world, has seen a steady earnings rise in the past 4 years, with net profit for FY11 coming in at 357 crore rupees and sales for the same period at 5,176 crore rupees. In spite of its stable growth, Voltas has taken steps to restrict the impact from the slowing Middle East market. The company has entered new geographies like Singapore and Hong Kong, which will help its near-term growth.
Alright, so that sort of has given you a better idea as to what the company is all about and the kind of performance that Voltas has seen over the past 1 year. So Ambrish, given that it's a stock that's vacillated between levels of 108, which is a 52-week low, to a high of 262, it's been fairly quiet of late. And if you look at the technical chart, it's been a bit troubled below its 50 as well as its 200 daily moving averages. How come you've picked it out as a stock?
It's basically just not the technical chart, even the fundamentals. If you're looking at the last 2 quarters results, look at the order flow. Everything has slowed down to a decent extent, because of which, this stock, which was about 200, has come to levels of about 120, 125. But again, at this price point, we are seeing a lot of value because we believe that if you're talking of the next 1.5 to 2 years, the order flows will increase. The margins should improve going ahead. I'm not talking of the next 1 or 2 quarters. Next 1 or 2 quarters, there will be margin pressure. But if you're looking at the next 1.5 to 2 years, things surely should improve. So at this price point, we are finding a lot of value in this stock. Again, looking at the sort of EPS which you're talking for, FY12, we're talking of about 10.25. For FY13, we're talking of about 11.75, 11.8. Looking at that, I think this stock can again go back to levels of over 170, 180 in the next one year or 1.5 years.
All right, expecting an upside potential of about 170 to 180, and Amrish maintaining that, however, there may be a few troubles in the near term. Over the long term, the order flow of the company does look robust. So, Amrish, for somebody who's missed the bus, who hasn't picked out into a Voltas at a current level, would you advise buying at these levels itself or wait for a bit of a decline?
This is more or less close to a 52-week low. 52-week low is about 108, 110. It is quite close to that. So I think even at these levels, one should be picking up. But again, I would say don't pick up the total quantity at this point of time because we could see the markets in this range for the next 1.5 to 2 months. So possibly you could again get to this stock at about 110, 111 levels, pick up more at those levels.
All right, that's Amrish's view coming in on a Voltas, not advising one to buy at this point in time exactly, given that it's a bit truncated. So don't put all of your eggs in one basket, but you can look to select the stock over a long period of time. Let's move on then and talk about Amrish Baliga's growth pick, and his growth pick this time around is GSPL. Have a look at how the company has performed over the past 1 year.
Gujarat State Petronet Limited, or GSPL, a subsidiary of Gujarat State Petroleum Corp, owns and operates a national gas transmission network within the state of Gujarat. The company is now set to become a nationwide player as it joins its consortium partners HPCL, BPCL and IOC to set up 3 long-distance gas pipelines covering North, Central and Southeast India. But concerns over tariff regulations have been plaguing the stock, even though the company's position as a pure transmission player largely insulates it from the concerns of rising natural gas prices. GSPL has seen robust earnings growth with annual profits increasing 5-fold in the last 4 years. Sales over the same period has more than doubled. Looking ahead, analysts expect a steady 10% growth in GSPL sales and profits in the next few years. For FY14 in particular, a significant pickup is seen in transmission volume, as a whole host of gas blocks are expected to start operations. With higher gas demand expected from refiners and power plants, GSPL stands to benefit due to deeper penetration of refineries in Gujarat.
Alright, that also gave you a better perspective as to how the company has performed. But Amrish, given the fact that GSPL has been a mid-cap company, it does seem to have weathered the storm that we've seen in the market fairly well, wouldn't you say?
No, that's because, again, just like GAIL, this is also into gas transmission. It's a pure transmission play. So the risk levels are extremely low. There are no issues as far as subsidies are concerned, just like GAIL has. So from that point of view, I would say that this is a much safer stock. But again, GAIL is a large cap, this is a mid cap. Looking at the performance of the company, we are looking at, possibly about 9.5-10 rupees for FY12, looking at about 11.5-12 rupees for FY13. So it is possible that this stock can actually move to levels of about 150-160. So I think at the current levels, 109, one could look at buying, a part quantity. Wait for possibly levels of 97-98, buy the balance quantity at those levels.
Alright, so that's the word coming in on GSPL, which is his growth pick. But Amrish, just wanted to get you in with the fact that, the company, one of the concerns is that it has been constantly underperforming the benchmark index over the past 1 year due to concerns over its stagnating volumes. Do you see this remaining a concern for GSPL?
No, this will not be a concern because the capacity utilization is quite high. And currently they have about 1,800 kilometers of pipeline, which will be doubled over the next 3 years. So clearly the volumes are going to move up.
Alright, so capacity utilization will help the volumes for a GSPL to move up, and Amrish Baliga is recommending that as his growth pick. So those were the 2 picks coming in from Amrish Baliga. It was 2 mid-cap stocks that he'd chosen. One was a Voltas, which he advised that the order inflow of the company would be very good, and 170 to 180 is the kind of long-term target that you can see. And his second pick was a GSPL. On that note, we'll take a quick break, but come right back. We've got lots more to discuss, including a lot of queries that have been sent in.